There has never been a better time to learn about smart contracts and crypto. And today we're going to be going over some of the reasons why 2025 is going to be one of the most profitable times to be involved in the Web3 space. You guys have been following along with what I'm going to be doing with my own projects, with my own businesses. But like I mentioned, I had these ideas way back when. So why have I waited to start now? Well, there's a few factors, but the first one that we're going to take a look at is going to be the market cycles that we see with crypto. Now, these cycles, while there's new variations of it every time the cycle resets, up until now, historically, it's been a very similar pattern we can use to our own benefit as far as timing things for maximum returns. So when it comes to looking at market cycles, the most important crypto to examine, observe, and understand is going to be Bitcoin. A lot of times, big moves that happen with Bitcoin are mirrored by a lot of the other smaller coins like Ethereum and obviously the even smaller altcoins. So I'm going to go ahead and show you guys just what a chart of this looks like, and we're going to examine what has happened since the very beginning of Bitcoin's history. So we're going to take a look at the price action of Bitcoin over the last 15 or so years. Like I mentioned, crypto moves in cycles. It's generally a 4-year cycle that we've seen with Bitcoin as well as the overarching crypto market. So let's just go ahead and look back in history. Now, I want you guys to pay attention to something. The first big move that we see with Bitcoin happens right around early 2013 when we have this massive shoot up in price going from about $14, $13 a coin all the way to a peak of $250, $260. Now, I want you guys to understand what triggers and causes these major moves. Well, one of the biggest events with Bitcoin is called the Bitcoin halving. So let's just go ahead and plot these out. So the first halving that we have is November 28th, 2012. So we'll just go ahead and mark that. So we've got Monday, 26th November 2012, and this is 1 week of time. So it's starting at the 26th, but the 28th would have been the Wednesday within this candle. So we can see here, Bitcoin's price stays the same. Then we have the halving, and the halving is essentially an event that marks the reduction of production for Bitcoin. So if every day there's 8 Bitcoin produced and then the halving happens, that is going to get cut to 4 Bitcoins being produced per day. Whenever this halving happens, it's essentially a supply shock in the sense that it's now more difficult to create more Bitcoin, meaning it is harder to get your hands on it. And given there's only going to be about, I think it's 21 million Bitcoin ever created, it's going to limit who actually has access to an entire Bitcoin. So this is usually a very key event where we see a massive run up, and this generally occurs for about, I mean, if you look at, like, for example, the last halving cycle that happened was COVID 2020. So it hit rock bottom below at like March 13th, 2020. And then it pretty much just rocketed up until hitting its peak around the December time of 2021. So we can even look at this as far as timelines. So the halving happens, and if we plot out a year and a half, so that'd be November 2013, I've noticed December of pretty much every year after the halving is generally where it peaks. So we can just go ahead and test this, right? The next halving that we've got is July 9th, 2016. So again, week starts Monday, July 9th. That would have been the Friday, but again, these are weekly candles. And then I'm going to just copy and paste this. So again, we've got December 17th is where it looks like it peaks. Now, again, this happens like clockwork. Let's go ahead and move to the next halving date, which would be May 11th, 2020, right here, right on the week. So again, we had it peak, crash, consolidate, although this is a little bit more volatile than what we've seen in previous ranges, but crash, consolidate, halving, and then let's go ahead and see if we see the same pattern. So we're going to go ahead and go to December of 2021, which would be right about here. So if you want to be really technical, it peaked November 8th of 2021. But again, it's around that December time that we see this major sell-off. I'm just wanting to check because I am a voracious learner and I do enjoy the charts. Like I said, this was one of my first ways of making money online that I really fell in love with, although I did burn quite a bit of money. You know, it was quite a toxic relationship, me and trading, but you know, who doesn't love the crazy relationships, right? So yeah, that looks about right. This is where we peaked. So it's actually around the end of November, early December. I would say historically, that seems to be the best time to sell crypto. Sure, it's not necessarily the peak, but if you want to just secure a fat bag, buy at the halving, sell at November time of the next year, you should be up pretty nicely. So without making this a trading space, you guys can clearly see there is a pattern. Every time that the halving happens, Bitcoin's price usually takes another massive run. And then about a year and a half later, around November, December time of the following year, that is typically where we see the sell-off. So most recently, the last halving that we had was April 19th, 2024. That would have been this week right here. And you guys can see Bitcoin did something that is never done before. Bitcoin had actually broken all-time highs before the halving. Now, does this mean that we're going to see a completely different pattern than what we've seen in previous years? It could. It very well could. But I still firmly believe we are going to see a run-up of Bitcoin. Now, whether that means we see price drop and then we see it run up in 2025, or if we see it break out of this level and just continue on this uptrend, I do believe we're going to see this hit probably about 100K sometime within the middle of next year. Now, let's use some critical thinking. I'm sure everybody remembers in 2021, boys in Miami and Dubai on jet skis, yachts, living that life. And everybody's like, damn, like the crypto life, that's where it's at. Well, it's very simple economics. Most of those people in 2021 who were out partying, well, they had bought somewhere around this time after the crash, around the halving. And so you got in anywhere in the range that it had been sitting in the previous cycle, even if you invested at all-time highs, you're looking at least a 3x return. So essentially what I am illustrating is every time that there is a new market cycle and the bull cycle completes, buying power for people who have money invested in crypto is at all-time highs as well. So the economics of this whole situation are really simple. People who have bought crypto anytime before the halving, typically they're sitting on pretty nice returns by the time that November, December time hits the following year. Anybody who has witnessed a cycle of crypto also understands there's usually a very heavy sell-off that happens. I mean, just within the last cycle, the sell-off went from an all-time high of 68K to hitting an all-time low of about 15, 16K. That's about a 70% drop. There's a few options people can exploit when they have gains within crypto, one of which being to simply sell. And if you do sell your crypto, it is going to be reported by whatever exchange you're using that this person has capital gains, and you're going to have to pay taxes on it. Now, another option is you leverage your crypto as collateral, where you can take out money and borrow against your crypto. But the only thing is you're at risk of liquidation. I explained in a previous video how Elon Musk had used his stock in Tesla to be able to buy Twitter. By borrowing against his shares, he's not selling and he's not having to pay capital gains tax. But his loan is only secure as long as Tesla's stock price stays above a certain limit. That is enough to pay off the loan if the collateral is needed to be sold. So if Tesla crashed 70%, Elon would be in hot water. Well, it's the same principle that you can apply to borrowing against crypto. If your crypto is at an all-time high of 68K and you take out a loan, but all of a sudden it drops to 70K, well, you better hope your loan it does not exceed 30% of the price crypto was at when you borrowed the money. So, a lot of times these investors, they're stuck in between a rock and a hard place when it comes to moving their money post-cycle. Well, we saw a third method of securing gains the last cycle, which was in the form of NFTs. You see, instead of selling the crypto or using it as collateral for a loan, what a lot of big players did was they moved their crypto and bought assets on the blockchain directly with their newfound buying power. Now, some of these collections you guys may remember, such as CryptoPunks, Bored Ape Yacht Club, there were certain projects that did sustain value long term, and that was the goal of most of these investors. It's to buy an asset that they believe will retain value over time, and by not having to ever convert into USD, while an NFT purchase is considered a taxable event, if you're using wallets that are off exchanges, I mean, it's just extremely difficult to regulate. So you look at something like real estate has something called a 1031 exchange, where if you buy property and it appreciates and then you sell the property, you'll owe capital gains tax. But if you then buy another property with your gains, you don't have to pay the taxes. I anticipate we'll most likely see something similar happen with crypto. That is still yet to be seen, but it is the direction I see the market and the space heading. So where am I going with all this? Like I've explained in previous videos, for those who are strategic with what they use the funds raised by the sale of their NFTs for, if they're using it to buy businesses from people who are retiring or assets such as real estate that are sold at discounted prices because banks need to get them off their books after people can't refinance their debt, well, it presents a very good opportunity to be able to create projects that allow crypto investors to buy into. And then, given they are tied to real world assets, even when crypto starts to crash, they will retain their value over time and appreciate with the value that is tied to the assets that produce cash flow themselves rather than the crypto market. So again, currently we are in the middle, I would say, of the next bull run. Typically, these cycles, they have a certain multiple that, as the supply gets a little bit closer to that 21 million Bitcoin mark, these bull runs aren't going to be as large as the very first ones that we saw in the early 2010s, but there is still a pattern that we can take a look at. So for example, if we look back at the 2012 to the 2013 run, there was a 77x return from the halving to the peak of the market. That is nice. Don't we all wish we could go back to 2013? Now, the next cycle that we saw, the halving started at, I will say about 650. We saw a 30x return from the halving. Most recently, the completed 2021 bull cycle was about an 8x return. To be technical, we'll do 7.9. So we can see from the 2013 to the 2016 cycle, the return on the bull market drops. We're looking at about 39% of the overall return we saw from the previous cycle. And then if we look at the 2020, 2021 cycle compared to the 2016, 2017 cycle, the return that you get from this bull cycle is only about 26% of the return that you got from the previous. Now, the last calculation we're going to look at is simply what rate is this return dropping by. So it went from 39% of the previous cycle for 2017 to 26% of the previous cycle in 2021. So what can we anticipate for this next bull run that we're going to be seeing from 2024 to 2025? Well, 26 divided by 39 is going to be about 66%. So we can multiply 26 by this, and that would give us about 17% of the previous cycle. So I would anticipate 17% of a 7.9x. Man, so this would be about a 1.369x. So hell, for video purposes, I mean, it's a prediction that's up there. Do I think that'll be the maximum we see? I mean, what would this actually look like? The halving happened when Bitcoin was about 64, 65, we'll say 65K. So that would put this bull cycle at only actually reaching about 89, 90K. That would really, really be something. So if we end up seeing a shift in the pattern that Bitcoin traditionally has gone on with these 4-year cycles, we could see something where it tops off at about 89K, but instead of seeing a massive 70% crash, maybe it only crashed back down to the 40s before the next halving that we would have over here in 2028. So we'll have to see. It remains to be seen. But regardless, smart money bought all the way down here. So even if it only does hit 89K, well, anybody who bought below this 30K mark, they're still going to look at a 3x return. And again, I anticipate the NFT market will revive as we see more people with an increased buying power in their crypto. So again, for anybody who is curious about whether they should look into starting an NFT project again, getting back into the space, I promise you there will be money that is looking to be moved once the cycle reaches its all-time high and people know that a crash is looming. Now, while this is the cycle that Bitcoin goes in, there is an overarching crypto cycle that we see that includes Bitcoin, but also examines the other 3 main categories of crypto. So generally in the beginning stages of a cycle, we see Bitcoin take off and outperform the majority of cryptos. Then we'll typically see Ethereum follow behind, and that will begin to outperform Bitcoin. After Ethereum has made a significant run, then we see large altcoins start to take off. So things like Dogecoin for the last cycle, that's considered a larger altcoin. Cardano is another one. So once we see some of these larger altcoins, we see these smaller altcoins, which, these can be anything from shitcoins to just small projects that may be very early on in their growth or be novel in the cycle. When it comes to NFTs, Ethereum is the main crypto to watch simply because Ethereum still, I believe, holds the dominant user base within the Web3 space. As we enter 2025, I do believe we will see the shift move from Bitcoin outperforming the majority of crypto to Ethereum. So now that you guys have the understanding as to the market cycles, why the NFT space generally picks up after crypto has made huge runs, that should hopefully give you guys a little bit more incentive and insight as to why you should be getting into the Web3 space. It is still very early. We have not seen or heard whispers of NFTs yet on social media, on the news. This is a good sign because it means while we are gearing to enter that phase, there's still time for you to learn the skills and understand how you could apply this to yourself to be able to build your companies, to scale your companies, or just provide value to your inner circle or an online community. So with that being said, I will see you guys on tomorrow's video. Peace.